For me, when I'm looking at momentum, Bitcoin hit its momentum stop and it turned green. I think I might have even said that on our last conversation. It continues to remain green. Interestingly, the NASDAQ just on Friday had a momentum shift just based off of the price action. And so when I'm talking about momentum, I'm pretty much talking about two major things: an ATR, which is an average true range, which is basically looking at the volatility that like the NASDAQ has a certain amount of volatility, Bitcoin has a certain amount of volatility. And when that volatility shifts or changes in a direction that's out of the normal trend that it's in, that's a trigger. That's half of how I look at momentum. The other half is just moving averages, like short duration moving averages versus long duration moving averages when they cross over. So when I look at those two metrics and I look at the NASDAQ, it is now green on both of those for the first time in I would say January of 2022. So it's been red for more than a year on the momentum. That literally shifted on Friday for the NASDAQ. Bitcoin was probably like back around Christmas time or somewhere around there. And so what I find so interesting about, and why I'm bringing this up is a lot of your indices, equity indices, are suggesting that maybe a trend change is in the works. But yet when we look at unemployment and we look at how inverted short duration versus long duration debt is, it's suggesting that we're getting ready for a big capitulation event in equities based on historic metrics. And so what I'm looking at, and I'm saying to myself, this isn't right. This doesn't look like it normally does, or at least how it's normally looked for like the last 40 years. What I think you might be seeing, and I'm going to use an engineering example, people have probably heard of harmonic or resonant frequency. When you start hitting resonant frequency, the input that's being supplied into a vibrating system, when you hit resonant frequency, the system is coming back at the exact same moment that the input's being supplied. So it's 180 degrees out of phase. It's at the exact worst moment that you could possibly time it. So like another example would be like if we were looking at a kid on a swing and they were swinging back and forth. When you push the kid, if you want to get the most bang for your buck, is like as they're starting to go back down is when you want to give them a push. If they were coming at you and you tried to supply the input as they're coming at you, that would be an extremely disruptive event. And the way I see what's happening in the markets right now is you're almost having this resonant frequency that's playing out in the markets where everybody in the market knows they got to supply more liquidity and more monetary units into the system. But it's happening at this point in time where the real economy, where real people are working, is desperate for, like, the liquidity is not trickling down into that part of the economy. So what I think you might actually see by all these momentum indicators suggesting that equities are getting ready to rip right at the moment when you would probably least expect it if you were looking in like a historical context, is this maybe like financial resonant frequency that's playing out right now, which I find extremely strange. But that's why I pay attention to momentum metrics, is because it helps me look at the market and remove whatever I personally think is going to happen based off of emotion, and just looking at the pure math of these indicators that typically steer me. They really help me with timing. I like to find things that are deeply discounted that I think have a really long-term value, but I like to get the timing. I try to get the timing as right as possible when I use momentum metrics to help me facilitate that. Sorry, there was a lot of different things.
Anything to add off that? No, I love it. I love it. I love
interesting times. Amazing. Yeah, no, I think momentum is a useful tool, exactly as Preston described, for timing when you want to place bets, especially longer term ones. I watch liquidity too. I'm a fan of Michael Howell, who does this in depth. I can't remember the name of his organization, but he really tracks
cross
that
border.
Sounds right. Yep, capital. You nailed it, Sam. And he tracks global liquidity, and liquidity. I think we've all learned by this point that Bitcoin price, at least, is in large degree a measure of global liquidity trends. And so, and by the way, most assets are also. Bitcoin's not unique in that respect, except for its sort of more extreme, right? I mean, it's definitely the canary in the coal mine on global liquidity if you strip out other things like, the 4-year cycle and the halving. And his indicators had shown a rise in liquidity in the first quarter, which is when, let's say, lots of assets performed better than some people thought they would. But it's also showing a slowdown and possible reversal in that indicator, at least on a global basis. And Bitcoin is a global asset, so we'll see. We'll see what happens. I am by no means, short term calling a bullish momentum like pile on the train. I never do that. But I expect reversals and retracels and retesting of prior key levels. But that's another thing that I pay attention to is liquidity.